All right, guys. That's all I got.
Season 3 is definitely not turning out like I expected.
Gone off
You're
the rails.
helping Royce with your hat turned sideways.
Hey, it's 10-12.
Some rough starts.
You're doing some 3-6 mafia over there. All right. It is after the bell. It is after Wednesday. And in the world of Trumpdom, it is always a fun time on Wednesdays, right? Because we have lots to talk about and recap, and things change like every day, maybe every hour.
Maybe.
Unlike the stock market, it has a lot of liquidity. His changes and going up and down.
The stock market has superb liquidity.
Yeah.
Right now. Yeah. Well, it's all fake anyway. All right. Let's anyway. Give me that tinfoil hat. We won't get into that. That's not one of the subjects today, because our millennial wrote it. Here we go. My guests are that millennial Daniel Hopwood, which is an institutional wealth manager for one of my favorite firms. Just kidding. And we have Josh Morgan from one of my favorite banks, JPM. Just kidding. And we do have my favorite boss of all time, which is, and I'm saying that because it's review time. My favorite boss of all time, Royce Quanticus Maximus.
He's only saying that because there was a review recently.
He said it. He just said it. I like it for one more year.
You everywhere.
I like it for at least one more year.
At least one more year. Well, there's that.
Remember, he's helped me make money out of stocks that were not making money for me before.
Yes, showed you some tricks.
And I have the receipts. All right. So let's go and jump in, get started. The title of this first segment is "Wow, Markets Are Something, Huh?" So you can just tell a millennial wrote that title. Daniel. So give us a recap of why you wrote that, huh? Just tell us.
Yeah. So I mean, a lot has been going on. Stocks have continued. I mean, kind of everything across the board, except maybe other than gold, has continued to tumble after Trump, and Zelensky had that amazing meeting in the Oval Office, which maybe we can talk about later. Which resulted in
don't push it.
which Trump said afterwards that they would stop all aid to Ukraine, and who's the Treasury guy? Bassett.
Yeah, Bassett, which is the old. You know how much I love him already. The old hedge fund guy.
Well, he said a deal with Ukraine for their minerals now is off the table. So, that kind of made markets go crazy. And then the 25% tariffs are now going into effect on Mexico and Canada. Goldman also cut their earnings per share growth forecast from 11 to 9%. And the stock market declined just under 1.5% in February.
Yeah.
So it was the narrative. It's a number. It's not wrong.
No, I'm talking about the reason the stocks went down. It was a good excuse for it.
Well, let's transition to tinfoil. Darin, please proceed.
No. I was going to let, since Royce and I talked about this earlier, the actual state of tariffs versus what really is happening, and when tariffs actually matter, and all this time in between. If you'll remember on my 3 things recently, I even said that, okay, these 25% tariffs are going to go into effect. Was it Tuesday? I said, but wait, it'll change. And
it did.
It changed. It's now, at least for automakers, it has changed to they give the month now until April 2nd, which is when they were going to do their retaliatory tariffs. So it's just giving the markets excuses to jump up and down and grab all the retail guys and get them, because they're all the way at the very top with all their investments. We'll talk about that a little bit later too. But Royce, tell me it's really not about the tariffs, because those tariffs take a little while to go to effect, right?
Take more than just a little bit of a while. So basically, you have to also consider existing inventory. Like taxing the new stuff coming in, not the stuff that's already here, not the stuff that's already in production. Whenever that deadline is like, hey, and once again, you're taxing a company, you're not taxing a country. So it depends, like if all the parts are made here in the US and they have to be exported to assemble and then re-imported to sell, who's paying that tax? And is it because it started in the US? Is anything being taxed? Right? So a lot of people are saying, okay, yeah, you have to get through the existing inventory and you have to have people willing to buy. Well, if there's no one willing to buy, guess what? You won't get any more tax, you won't get any more revenue because people just aren't buying. So now you have a surplus of supply and not enough demand. So what's the first thing that's going to happen? They're going to start lowering prices.
Mm-hmm.
And selling specifically maybe in bulk to basically try to get around it. It's like, hey, 2 for 1.
Well, it's well known that a lot of companies in the U.S. going into the Trump administration knew about the tariffs, and so they just like the retailers padded their inventories in anticipation of that happening.
Yeah, it's
and
never
like
show
you
your
said
hand before.
Right. And like you said, with the cars, I mean, they already had enough time selling cars because of the interest rates. And so now they were full, and this comes along and it's really a big nothing burger. Josh, chime in while I try to sneeze.
No, I mean, the thing is, like, yes, that is a very level-headed and logical way to look at it. That is not at all how investor sentiment works. It's not a logical and level-headed thing. It's like you literally, I mean, the one thing, the price of the goods is going to change, 6 months to a year down the road when we get through all of the inventory. What we're not going to have to wait on is people's reaction to the news. And I think what a lot of people are forgetting is that kind of one of the bigger narratives coming into the election and then post-election was that a lot of these Trumps are just a giant negotiating tactic. Like we're just basically, he's going to threaten all of these things and they may or may not come into fruition. Now we're getting to the, mess around and find out scenario where we're starting to find out that he's just as crazy as he was the last time that he was president, and nothing has changed. Only now he has more weapons at his disposal. And he literally is, if he does not get every little thing that he wants, regardless of how ridiculous or productive it may be, he's going to sit there and just throw numbers around because it doesn't necessarily matter to him. I mean, you look at what's happened. You're talking about, we're talking about markets. You're talking about things changing. Like ever since we had that massive increase, all of the Trump hoorah that everybody was over, it's all been wiped out. Like that, all of the gains that we've had where everybody was so excited about, yes, he's going to be pro crypto, pro business, pro, economy, pro everything. And now we're finding out that he's literally just pro tariff. And so all of that has been wiped out again. And so we'll see, it may work out in the end. It may work out, down the line, and that's all well and good. But the one thing that the market does not like is not knowing. And that's what we've literally taken a shot in directly injected into the veins of the market, a massive amount of uncertainty.
So do we need MAFO hats now instead of MAGA hats? Is that what you said? MAFO?
Mm-hmm.
Mess around and find out for those that are slow. All right, so let's go.
I was like, what are you saying?
Exactly. He was slow. He just got up.
It's mofo, but different.
Yeah, that's what I was getting to. I'm wearing my Memphis duck here.
Mm-hmm.
All right. So you said there's good news, Daniel. What's the good news? Besides the Bible?
Yeah, this is potentially just seasonality here, So, over the past 50 years, every time a bull market enters the third year, it gets pretty choppy, which is where we are right now. Also, the first quarter of a president's new term typically starts out pretty weak. But both of these things, that if the market does recover, right, obviously a big if, that things typically do pretty well into the third year of a bull market. Historically, if it recovers, there's solid returns in the first year of a new presidency. And, we just had a pretty bad sentiment reading, which, is obviously like an illogical response, but 85% of the time that there's a bad reading, stocks trend higher afterwards. So this could just be all a bit of a rough patch of seasonality that is coupled with some, sporadic, high volatility news, we'll call it. And it could, just be that is true. A bit of a nothing burger in a little bit.
Okay, so the narrative on these shows that I don't recommend anyone to watch is is that it's retail, because retail, the bad, like Target had a bad forward looking, and if you look at all these ERs now, all of a sudden they're all bad forward looking because of the quote tariffs that are happening or going to happen, and so they're using that as the narrative reason, which I mean is sensible. But I don't think it's because I think it's because they also know how hard it is on the lower 80% right now, which we've said for a while now, and it's time to pay the piper, so to speak. And so I think that's the real reason. It has nothing to do with these tariffs and everything else, but they have to have some type of excuse for where the market's going to go anyway, right, Royce? Where the charts are going to take us anyway. So they come up with that story.
Yeah. Not sure if you guys remember or not, when Trump first got elected in his first term, basically they said that the market was going to crash and it was going to be doom and gloom. And it shot off like a skull cat and was a bull market to end all bull markets, right? Well, basically now he's taking control and we're at the top of the market. So whether he's doing it or basically just natural gravity pulling us down, it's overbought and it has to correct. And unfortunately, with him at the helm right now, it looks. I'm hoping that he can actually keep the market up. Not saying I'm hoping that he can keep it up. I'm just hoping that he can keep the market up.
I was waiting for that. There's medicine for that.
He's 78 years old. Give him a break.
Have you seen his wife?
He just needs a little blue market pill.
The White House doctor said he's in spectacular shape. All right?
But it's scary. Like literally the weekly charts. The weekly chart says that we are in for a correction 5 times the size of the 2008 crash.
Right. Now we've heard that for many months now. It's just now they're finally.
But so I'm like, so whatever he's doing now, hopefully he's doing something that basically that will counteract it or at least slow it down. Or what's the soft landing? Or what's the narrative?
No landing.
Right.
Soft or no landing. Yeah.
Well, I mean, the scary part is though that we're already past. Like if you look at the numbers, we're in that 10 to 15% downtrend move already. Like we're already in correction territory.
Yes, we've crossed some lines already. So
we've hit we're sitting. I think right. I think SPY was sitting like right on that 200-day moving average.
Yes,
and that is a dangerous point because when that trips, that's going to send all of the algorithms into a tailspin. Right. Yep. And there's going to be selling pressure and everything, and then we get into recession territory. And considering the fact, if you look just anecdotally, if you look at the odds of the rate cut, we went from 0% chance to now all of a sudden is the Fed's hand going to be forced because we start teetering closer to that recession territory.
And that's another part of the narrative. They basically make things look bad so they have a reason to say, hey, we need to pull this lever.
Mm-hmm.
Yes.
Right?
Yes.
So, hey.
The market's creating the news instead of the news creating the market. That's people will learn someday.
One day. Until they do, watch it burn.
I had to let it burn, let it burn. We got to get some type of song in every week, right? Let's go to Bitcoin Applehead and his favorite subject here, which is the crypto reserve. I think he had a party bigger than Mardi Gras when this happened, when they announced this at his house. I could be wrong. And all the Asians were like, what is this guy doing? What is Mardi Gras?
He's living his best life.
It is funny. I was at a co-working space yesterday, and I heard someone ask someone else, like, "Oh, what do you do?" And he's like, "Oh, I'm a crypto trader."
Mm.
And I was like,
"Ouch, so sorry. My condolences."
That means he's
sign of the times.
And they were best friends forever.
I just thought to myself, I was like, I hope he was short.
Well,
all right.
I mean, it's been up and down, though. It's been up and down. So you can be short and long and within a matter of a day and do well. So, yeah, go ahead.
Yeah, right. So our Lord and Savior finally created the Bitcoin Reserve. Okay.
Wow, bringing blasphemy to the channel. We're going to get canceled by a higher being. There's lightning in the area. Stop it. Go ahead.
So they finally did it. They made the, shouldn't say they finally did it because it was really just a tweet, but they finally did it. They made the crypto reserve, which was honestly a pretty funny rollout. I don't know if you guys saw it, but when he did the original rollout, he essentially said it would contain Solana, XRP, and Cardano. And everybody was like, where's Bitcoin and Ethereum? Like the only two relevant ones in there. Right. And then he had to like retweet himself of like, and of course, Bitcoin and Ethereum.
We still love those guys. Those guys are still near and dear our hearts.
so that was part of the nice rally that Royce caught with his little XRP. But now we're back down pretty much to where we were. I know it's trended up a little bit, but it's really because after the tweet, there is no, we'll call it documentation of what they're going to do, how they're going to do it, if there's a buying schedule, if they're just holding, things that the government has seized.
Just watch the ledgers. Watch the ledgers.
Mm-hmm. And so, they're the government, right? They're going to release some official document of something before they probably start buying stuff. But, it just makes me wonder, is like, okay, was that just a nice little blip before things continue down? Or are we just following some, Bitcoin, 4-year cycle where this is just the first big drawdown of the big uptrend before it comes?
My quick input on that is that, first of all, it was a campaign promise that he's going to support it. So he had to do something in official nature. And then there's this crypto regulation board that is now going to begin, I believe, next week. So it's not really official until that board's created. And the head of it is Hester Pierce. And a lot of us apes, if you will, we go back with that name. And I won't tell you the things that we've called her. But she is a huge. When we were trying to do the CAT system, right, to actually trace where all the shares were going and where they're hiding them and what countries they're in and in what shells they're in under, she was the one that got so upset about with Gary Gensler about, hey, this is just too much. We shouldn't have to do this all the time to submit these reports. It's too tedious work. And I mean, we had a great time with that with our memes. But anyway, Hester Pierce, a couple of years later, 3 years later now, is heading up this crypto team. So what I think about this regulation. Just like a lot of things in this administration, there is no regulation anymore. We're in the wild, wild west, and I don't like it. That's my tinfoil. Go ahead, Mr. Tinfoil Hat wearing.
I personally, I think that now that we have the reserve, or now that I think they're actively planning the reserve, maybe there will be more regulation. Maybe they'll find the bad players. Maybe it'll stabilize cryptocurrency. Cryptocurrency is crazy. Like, it drops 10K, it rises 5, it drops another 3, it rises 15. Can we just get an even metered? Hey, people are continually buying, not trying to time the market. It would be great to see, like, for example, if they do it to the scale that I'm hoping that they do it to, that basically they make a Nostris account for cryptocurrency, meaning basically, okay, if we're going to hold a percentage of our money in Bitcoin, we have to buy, $50 billion worth of, or 50 trillion worth of Bitcoin, or have a big enough reserve, but you can't buy it all at once. That means you have to steadily buy it month over month, year over year, which hopefully should even out the supply and demand as the price constantly goes up, because the more that's bought, the price obviously is going to rise. So
sounds like I should get highly leveraged.
Yeah. And the Bitcoin ETF and the Ethereum ETF, that could fuel it too. It's like, hey, spread it out evenly across all the playing fields, and then maybe it will be adopted. Right now, of the world population, maybe 3% own crypto. Everyone else is afraid of it. So, hey, if they can even it out and make it more commonplace, get rid of the pennies, get rid of the nickels, get rid of the dimes, and, hey, maybe make crypto versions of pennies, nickels, and dimes.
Well, we've got digital currency for that already, don't we? I mean,
For sure.
But my thing is that, and I'm going to sound like one of those OG guys who now love to make money off of it. We used to say we can't do it, is all the corruption that's been involved with Bitcoin. If you don't want something traceable and you want to do something that's corruption at its best, then use crypto.
This concludes my being on this show. I got to catch you guys.
and not only that, but instead of getting,
what do you mean? You want to use US dollars, not crypto. Crypto is easily trackable. Dollars.
I don't believe either that they're all one for one backed with dollars. But we go back to.
Wait, you don't believe dollars are backed with dollars?
No, dollars don't back the crypto market. That not necessarily everything actually came from the dollar origination.
No, it came from Tether dollars. Tether is back.
Yeah. Okay.
And then there's USDC, and then there's the Ripple dollar, and
sure. I just believe if you can program things, you can create money out of nowhere, and not everything's backed by actual currency, and just things get created. We can just create money, kind of like the Fed. I'm just going to hit everybody today.
Money was created, Darin. It is all fake at the end of the day.
Would you like some Royce coin? We got
some. Anyway, hey, I'll invest
all in Royce coin.
I'm going to be one of the founder investors on that. Yeah. Before it IPOs. Yes, absolutely. We can get it for a penny and then sell it for $80 a share or a coin. Anyway,
I can spin up a meme coin of Royce in 30 minutes.
Just get an AI agent. Yeah, get an AI agent and create your own coin, and we're good.
Yeah.
Anyway, so my point is, before we got off the exit ramp, is that the current crypto should be more regulated. And in my opinion, this little virtue signaling board they're creating with Hester Pierce is going to make sure that nobody touches it, and it's going to be a lot less regulated. But that's just me, because I love Hester Pierce so much. Yeah, go ahead, Josh. It's your turn.
We're talking about regulation and bad players. Like, in what world would the bad players want to regulate themselves?
Exactly.
Who? What? Where? That doesn't happen.
Don't get me started on who the bad players might be.
I mean, it's the same sentiment as like why people suddenly feel like these billionaires that are coming down here suddenly care about the little guys and the working class and the people actually doing the labor. Like, when they've been they've been riding those backs of and underpaying them for years and years and years, and all of a sudden we put them in power and they're these bleeding heart individuals.
Yeah. It's funny how that happens and changes.
I'm trying to keep a straight face over here, Josh. You're making it hard.
Yes. All right. We
they care. They care.
Yeah.
Fiber of their purse.
We're talking about humanity in general now, not just crypto. Let's go on to the Mag 7. Down bad, he says. What are you saying there, Daniel?
It's down bad, Darin. So Nvidia down.
Not all the sevens. It's some are and some are not.
Sevens.
But I guess as a whole, yeah, it's definitely down much worse than what are we comparing it to?
Well, themselves. Nvidia's down 18.5%.
All right, there you go.
Amazon 12, Alphabet 17, Tesla, one near and dear to my heart because I own some 40%. Thank God I'm still up somehow.
Right.
Microsoft 15%. And, Apple's down 7, which honestly it should be down more. And, Meta just missed the cutoff of it being in, a decline at 9.8%. But, the reason the market's been down, in part is because these guys make up like half of it. And these guys are all down a lot.
Exactly.
So shout out to the other 493 that are doing nothing, supporting us.
All right. My take on this one, the quick one, is that it was time to take profits. It was time for these guys who got infused from Congress and all of their bills and had all this extra money that went to the banks and pumped up the market, especially these 7.
They have to pay for that election somehow.
Yeah, exactly. And then kickback. And then you see that once, if you look at a chart of retail investors, you'll see that at the very tippy top, it's all retail investors that decided to buy in at the top, as they say. And so it was time for the big institutions, the bad guys, to take their profits. And that's why the market went down. It was time to take the profits. So, but now they're saying that they're taking that profit and putting it back into the 7 again. I don't know. We'll see. I'm just tired of hearing about the Mag 7. They need to come up with something else.
Like I told you, my mother-in-law literally about 2 weeks ago said she was buying Bitcoin. I'm like, yep.
Time to pull everything. That.
Time to pull everything.
By the way, listen to,
like back in the day when they had like all the Tiger, like back in the day when they had all like the Tiger 40 bros that were all buying the exact same thing, and all these hedge funds were propped up by the exact same 40 stocks, and everybody's like, the problem was and why we got one of the reasons why the numbers got so skewed and why like the forward profit earning ratios were so off is because you didn't have any buyers. Like everybody was holding. Mm-hmm. Because, all of these institutions own so many, 90% of the shares.
Yes,
nobody's going to buy it. And then all of a sudden you get an influx of retail and holy crap, there's finally some buyers. So there's, there's somewhere to actually take profit to. And then, then you get this whole cascade effect, and then the algos tripped, and you get, the gaps and the downs, and it's a slippery slope. And that's why now the algos are starting to come back. And, I mentioned earlier with that kind of, a lot of them are hovering around that like 200-day moving average. Algos are starting to come back around and be like, oh, okay, now it's time to buy again. And things potentially, as long as we I guess get a little bit softer on some of these trade wars, it could go back up.
Yeah, it was rug pull time.
Yeah,
let's catch those retail guys and once again and make them pay.
So, question: do you guys? I know Darin, you look at the Fred reports and all this, right? But do you ever look at the M2 money supply?
Yes, every now and then that is on some of the YouTubes I watch. M2 because
right now, so right now the M2 money supply is at an all-time high, which basically means there's a ton of money out there. The problem is a lot of people are not using it for goods and services, so it's out there, but it's not being spent. So it's like everyone's holding their breath, no one's putting anything in. So, and the last time that basically it was at almost this high was in 1959. So things aren't looking too good. Things are not looking too good because basically people are afraid to spend their money, and basically with the constant rising and inflation and everything that's going on, it's that means even the big people, the banks that would normally be trading and buying goods and services are literally just sitting on their hands, not. And the question is, why? Is that because of the reserve that they're trying to stand up? Is that because people are afraid that basically the money, the market is adjusting and they're holding their breath until it stops correcting to potentially go all in? There's a lot.
It's like, where would you spend? Like where there is no, you look at Buffett, he's sitting on a massive pile of cash.
So why is it in the market?
Where do you put it? We've talked for almost an entire year now about how overvalued everything is. Like, stocks are super expensive. Like, don't make financial sense expensive. The fundamentals, you'll see all the memes about dudes throwing their fundamental books in the trash because, and you got guys that are making money off fart coin. Like, the fundamentals are gone. So where do you put your money? Like,
Bitcoin.
Okay.
Sorry.
Even Bitcoin's at 100K.
Put it in the bank like they tell you to, and get a 5% on a CD.
But if you think about that fundamentally, you're suggesting that I go spend $100,000 of my money into a virtual currency that doesn't technically have any value other than what other investors put on it. Like,
well, it goes into US dollars, right? It goes into US dollars, and then you convert it to that currency. So it has a value. You just have to make sure that you're back in US dollars before the rug is pulled.
It's a very loose definition of value.
Enron also had value once.
Huh? That worked out really well.
Let's go buy
let's
go buy Sears and Blockbuster and see where we are.
Well, I mean, the funny thing is, I think Enron's actually making a meme comeback, but
I saw that.
Yeah.
All right, guys, I got two terms for you. One is private lenders who will not show up in these reports. And the second is credit cycle. That was something I wrote down because I'm now starting to hear very little, maybe one person on CNBC has mentioned the word credit cycle, probably because they told him don't ever say that again. And anybody else that comes on here, we're not going to let anybody say anything about credit cycle because that's what they're scared about. So, Royce, can you quickly and succinctly tell us what a credit cycle is? Are you familiar with the whole scope of credit cycles and why they would be scared of it?
There's a lot to be scared about right now. So on top of the credit cycle, did you know historically this has been the largest draw on 401ks ever?
Yes, that's in my three things.
Last few weeks.
Look at that segue. Right? I like it.
Yes.
Right? So it's like, wait, why is everyone pulling from their 401k? Why is everyone touching their retirement? Why is everyone pulling? Well, most of the reason is they just don't have the cash flow that they need. And things are not getting any less expensive. So it's like, okay, I'm either going to put it on credit or I'm going to pull from retirement to make it work. Which that's not a good way to save, and that's not a good way to basically, get to the end game. But unfortunately, a lot of people are being forced that way.
Well, a lot of people changed their lifestyles to the rich and famous, and they didn't have the rich and famous income, and that got drawn down. And now they're having to try to live with the Joneses down the street, so to speak. There's an old term, and they can't. And now they're having to use credit for basics. And they might be losing their car, they might be losing their home. There's things that they might be losing, and it's causing it because defaults, which we've talked about before here in the last few months, is just keeps going up. And if you listen to those stations, they downplay it all the time. It's still a very resilient consumer. We know that it's going up. We know the defaults are going up, but it's still a very resilient consumer. I'm surprised they're not trying to say they still have funds from COVID. I mean, it's crazy what they're doing with that. But yeah, the 401ks, and I've kind of flipped it both ways. It's like when I read that, it could also be that there's other ways to invest that money instead of 401ks. And that's why it might be down.
Have only existed for about 45 years. So prior to our generation or this generation or a conglomeration of this generation, they had pensions. They had other ways of saving and making their money work in the stock market. And the funny part is when they designed the 401ks, the Roth IRAs, the IRAs, they specifically do not allow you to sell options or write contracts on qualified money, which basically is hamstringing anyone that actually wants to be able to make money and make consistent weekly gains. So much that you have to have now wealth managers in the middle making you, hey, if you make 10 to 15%, you feel like you've done something great. When guess what? Prior to all of this, there were pensions in place, and companies could literally make money, sell options, and make their pensions grow, and not just grow 10 to 15%. I mean, grow like 40 to 50% per year. So it's definitely a different paradigm that we're in. And will 401k survive this administration? Maybe, maybe not.
Well, I know that one thing interesting I read was that a lot more companies nowadays automatically put you or enroll you into 401ks, and I guess that maybe that's part of the package or whatever it is. But I just can't see that continuing. And I do know, though, I don't know if you remember, it was a month or two ago that a lot of these investment firms were trying to create or get an amendment to a bill so that they could actually use 401k that make it easier for Billy Joe to take stuff out of his 401k and use it to invest in. We'll see if that happens, but it was people like Citadel and those some of our favorite guys that were trying to make that happen. So
honestly, I would love to see a bill that allowed you to basically be able to write contracts on options. That would change. That would literally make a 401k and IRA or Roth IRA way more useful.
Gotcha. The last thing on that subject, though, was in that article was that it was hardship withdrawals, which is what people were using, which I did back in the 2008-ish era, and paid dearly. I mean, it was like 30% back then. I don't when you include it might have been more, 40%. When you take it out, you get that 10% fee, and then you get whatever your capital gains.
Your capital gains is for
crazy. But it was by desperation that I needed the money back then, because that's when everybody was needing money and or lose their house kind of thing. So it's like, I think we're rhyming again. We've liked to say that over the last 6 months, and here we go again. We might be rhyming with and therefore, if that's going to happen, what's the best thing to have? And that's cash. So if people are pulling cash back to jump in and do the same thing they did back in 2008 and get all these cheap houses, then that might be why there's a lot of cash out there. I think you said
something else to take note of in that foreclosure market, in that 2008 crash. Everyone that lost their house, 95% of those people didn't know that all the equity that was in their house was still their equity. So once the banks foreclosed on it and repossessed the property, the equity that was in the house from where they paid from day one and everything that it had appraised to up until that point was theirs, but no one told them.
Yep. We need to keep repeating that over and over so that if anybody gets in that situation anytime soon, or is in it now, they know to get their equity.
You're broke. Foreclosure just means you can't afford to pay that note, but any money that you have in it is still your money.
Yep. All right. Any last words before we move into the chart there, Josh? Since you're the big bad banker, anything? Okay.
No, right. I think y'all covered everything. To be honest.
Yeah, I think so too. We don't need to pound it in the ground. Let's go on. Yeah. Make mincemeat out of the horse. All right, so Royce, it is time for After the Bell, Crayons and Charts. And of course, Royce will walk us through using our indicators that we have here. And if you're curious about those, make sure you go to our website and look at Arbitrage Trade Assist.
Yes, so it's drawing, it's trying. So
we have AVGO.
AVGO. This is Broadcom Inc. Right now, they're at an all-time high, or pretty much was a few weeks ago. Got a Z, got our cross saying it's over. We're going to go back down. Previously, when they got there, touched the compass and momentum line, but was able to stay above. This time, it's not looking so good. We got our first dollar sign, still waiting for our second as this guy continues to fall. Going back down to our daily time frame with our apocalypse band, we're not sitting in a good place, not even remotely. In order for the charts to basically be right and stay succinct and true, where you don't break the rules of math, physics, and all that other stuff, these candles have to touch that light blue line that's sitting on the very edge of our deflection zone, which means Currently, AVGO, which is sitting at about 191, has to go down. It's going to blow straight through the orbit line, which is sitting at about 169.68. Should not be able to find support there. And it might find support here. If it does find support here, it needs to hover here. And I mean hover, I mean like 3 to 4 months. Hover at 140-ish range to prevent it from falling even further. The next one basically to allow us to get back into a buy trend, one that's sustainable, it needs to touch at least 135, and our dashboard is even showing that 134.84. But if it's not able to hold that level, unfortunately, there's a good chance, because we did go out of bounds, that we will make it all the way down to about 94.97, which from where we are, yeah, that's almost a $97 or $100 fall from where we currently are. And after hours, it's not looking good. We're already down about $4 and some change, a 2.5% pullback. But this is not the end of this story. I'm not sure what's going on with Broadcom, but according to the charts, it will not be a pretty show unless you just like Carnage. Maybe it's a horror show. Who knows? But that's all I got for you guys today, and hopefully you're not in AVGO.
All right, that is Crayons and Charts with Royce Wells. So you're saying it's going to be a huge trampoline, and there's going to be an overcorrection, possibly. All that's possibly going to happen.
All of that's possibly going to happen in the next. And unfortunately, since this is an apocalypse band, this is an 18-month forecast. So from where we are to potentially somewhere mid-June in 2026, we may still be watching this guy fall.
Well, I mean, I've been here long enough now, and you've trained me well enough to know that. I mean, that's a lot of money you can make going down and back up and back down, whatever it's going to do. So if you just hang with those indicators, you'll know when to go up and when to go down. So that's what it means. I'll play the CNBC analyst that comes in and is always a bull. Will say. There's money to be made.
You're definitely not perma-bull. You're perma-bear.
Yeah.
Yes.
I'm like, no.
I can't stand the fact that I'm making money on AMC going down. It's terrible. I hate it. I need therapy.
Instead of doom and gloom, it's Darin and gloom.
Oh,
Darin and gloom.
I tell you.
I love it. Maybe that could be a segment.
Darin and gloom. I'll just talk like Eeyore the whole time. Oh, bother.
Fall off again.
There goes AMC again. All right. Josh, speaking of annoying, just bullies, we've got Josh. Josh, and see these? Look at him. He's even taunting now with his little. Look at me.
Winner, chicken dinner.
I do like he's an 8, but at some point, even your best friends, you're like, you're getting annoying. I mean, come on. So he won again. We were doing Sirius XM, which for some crazy reason, I guess Apple didn't get this, but the ticker is Siri, SIRI. Mm-hmm. And it was funny because all week it kind of took a dive. Do you have it pulled up? I don't know.
I do.
You can. Okay, so you can see what it did. Speaking of making money, down and back up again, which you could have done here since last year. But anyway, it just took a dive, and it dove all the way. And when we first started this last Wednesday, I was like, well, I took the worst possible because I don't
know. It's been falling for a while.
Yeah, but it just hung up there, and then all of a sudden, like today, it finally dropped into my channel. And which is even worse. I'd rather not ever hit it than to come down, touch me, and then run away, which is what it did.
Sounds like your dating life.
I was like, wow, there are so many jokes in that statement.
Mm-hmm. Oh, Father. Yes. Oh, the therapy bills. But yeah, and then it jumped right back up at the last minute because this thing ended 23.
We'll cover it this time.
Yeah, this thing ended in double Jordan 23-23, and but it got down to, and my channel began under 23, and I tell you, 30 minutes before, it was at 22.90 or something like that.
Yeah, we were watching it as I was leaving out. I
talked to Royce, yeah, and then as soon as he walked out of the door, it was like 91, 92, 93, 97, back down to 92, and then it just popped over and never came back. So congratulations, Josh, on the win. Let me pull up the scoreboard, our brand new season 3 scoreboard. You'll see Josh has 2, Daniel has 1, I have 0. But I can take
0. We're in this together, brother.
Well, I'm saying, so I'm equal with the best, so I don't feel bad.
I don't know about the best. Looks like Josh is the best this week.
Well, that's what I'm saying. He's a bully.
He's got a point.
He's not a bully. He's a bully. So you get to pick, Josh, what the stock will be, and I think you already did that.
And what was it again?
Hang on, let me.
Yeah, OKTO.
OKTA.
Yeah.
OKTA. Woo-wee.
Yeah, there's a candle and a gap and all that good stuff.
All the good stuff.
So last time it was at this point, it looked like
and
it
the
was
range
overbought.
the range is silly, folks. The range is literally sitting at about 127 all the way down to about 69.
Nice.
So you can do whatever you want. What do you want?
Nice.
So I say give everybody $15 starting at $70.
Yep. All right.
So we're 70 to 85, 85 to 100, and then 115
to 115, and then 115 to 130.
Give me that 100 to 115 range.
Which one are you taking?
100 to 115.
All right. Smart man.
Okay.
All right. Who do you pick to go next, sir?
I'm really tempted to shake things up a little bit, but
why would you do that?
All right, I guess. All right, okay. All right, Darin, you get a chance. Go ahead.
If I was up like 5, then yeah.
You're like a little kid with a tantrum.
We have nothing.
He's just mad.
Remember who butters your bread, Josh. Remember.
No, Josh is mad because we need that randomizer badly. Josh is just mad because I sent him a meme of a gorilla throwing poo at him.
Mm-hmm. So wait, how many weeks have you picked Darin to go first? I'm just saying.
The same as when you guys have it and you pick your teammate.
Yeah, we'll see if you guys ever win one again. We'll see how you guys.
Ooh.
Fair enough.
Wow.
Fair enough. All right, it's official. It's official. It's official.
Those are some words.
It's official.
All right. I am taking the one just below that, so we're going to have that whole middle part covered. I'm going to be 85 to 100. So, who is next? Oops. Got a peekaboo. Who's next?
Royce. I guess it doesn't matter. Those are both terrible channels.
We hope.
I guess Royce, you can go ahead. I'm interested to see.
All right, 115 to 130. Let's go.
Ooh.
Okay.
Even you can't be confident.
This thing is going to break out.
That one.
This thing is breaking out. I mean, the last time it was at this level, I noticed on the chart it was considered overbought, but I haven't seen the O yet.
You haven't seen the O yet, and all that's going to be there.
And that's what she said.
So many jokes. Okay.
Yeah.
Big O, let's go.
All right, Daniel, you get how low can you go?
Yep.
May it not drop all the way down and then come right back up into my channel on Wednesday at 2:50 next week.
May it never enter your channel ever. May it gap down tremendously.
All right, guys, appreciate it. Again, like every week, I mean, every day, there's news to be had. Maybe we're going to get a break till April 2nd now on lots of news, but I doubt it. As long as
April 2nd, it's March 6th, dude.
As long as there are wars to be fought, possibly, and tariffs to be had, and and egos to be enacted. I guess we're going to have lots of stuff. You guys hear me too, because the regulations are just driving me nuts. The lack of the regulations. So I'm moving more towards Josh's side here all of a sudden, not just with the APE and everything, but with this administration is driving me nuts with that. All right, we'll cut it off here. Let everybody go. See you next Wednesday. Bye. Memphis, man. Memphis.
Mine.